Definition of MFRS 134 is a financial report full of periods shorter than a financial year, which can be complete or condensed set of financial statements. In the Bursa Malaysia, it requires all entities whose debt or equity securities are publicly traded to publish interim financial report. For example, it issues semi-annually, quarterly, or bi-monthly. It is prescribed the minimum content including disclosure and identification, the recognition and measurement principle that should be applied in the interim financial report. Purpose of this is to provide an investor and other users with more timely or current information. It also to enable users to evaluate the entity financial position, performance and cash flow on continuous basis. MFRS 134 ensures that companies provide reliable, consistent, and timely financial information between annual reporting periods, balancing completeness with practical by focusing on materials update.
According to MFRS 134, entities are required to disclose significant events and transactions that affect their financial position and performance during the interim periods. One significant event is the recognition of revenue during the interim period, based on the principle that revenue should be recognized when it is earned and not deferred or anticipated. For example, Petronas recognized revenue from the sale of oil and gas in the period in which it occurred. This directly affects the company's financial performance as it determines the amount of revenue and profit reported for the period. Another significant event is the use of estimate in preparing interim financial reports. Petronas applied estimation in areas such as inventory valuation and income tax expense, as interim reporting relies more on estimate compared to annual reporting. This affects both financial position and performance, as changes in estimate may impact reported asset liabilities and profit. This disclosure helps users understand how the company's performance and financial position have changed since the last annual reporting period.
So I will explain about the basis of the preparation of the interim report of the Petronas. There are two methods used to preparing the interim financial report. The first one, we have integral method. Integral method treats the interim period as of the full financial year, while the discrete method treats each interim period as a separate and independent reporting period. So Petronas also prepared the interim financial statement in accordance of MFRS 134, interim financial reporting. This interim report should be read together with the audited financial statement for the year ended 31st December 2023. This indicates the companies adopt the discrete method where each interim period is treated independently. For the reporting period, the statement financial position is at 30 June 2024 compared to the 31st December 2023. The profit or loss statement cover for 1 April to 30 June 2024 compared to the same period in 2023. Meanwhile, the cash flow statement and statement of changes in equity cover for 1 January to 30 June for both years. Overall, the statement of financial position showed an increase in asset, liabilities, and equity indicate the strong performance and a stable financial structure. The statement of profit or loss shows higher revenue and profit before tax, mainly due to strong operation and stable crude oil price, reflecting to the solid profitability. The statement of cash flow indicates strong cash generated from the operating activity and showing the health core business performance and a good liquidity. Lastly, the statement of changes in equity show the increase in total equity, mainly driven retained earning, which highlight the company's ability to sustain growth over time.
An operating segment is a component of an entity that engages in business activities from which it earns revenue or incur expenses, including inter-segment transactions. Its activities are regularly reviewed by the Chief Operating Decision Maker, which helps in making decisions about resource allocation and assessing the segment's performance. In addition, an operating segment must have discrete financial information available so that its result can be separately identified and evaluated. The standard applies to entities whose equity or debt securities are publicly traded, as well as entities that are in the process of issuing securities to the public. It also applies to entities that voluntarily provide segmental information even if they are not required to do so.
We're moving to the next is the Chief Operating Decision Maker. So the Chief Operating Decision Maker, CODM, is referred to the function and not necessarily a specific person or job title within the company. Allocate the resource to different operating segments and evaluate their performance. This function is usually carried out by the highest level of the management, such as COO, senior management team, or even the board of directors, depending on the company's. So here is the example of the board of directors of Sunway Group. So the first one we have Tan Sri Datuk Sri Dr. Jeffrey Chia is the founder and the chairman of the Sunway Group. The second one we have Datuk Sri Idris Jalla is a non-executive co-chairman, independent non-executive director of the Sunway.
Let's move to the types of segmental report. There's two types segmental report that will be discussed in this video. First, business segment. Business segment reports classify financial information according to the nature of product and services provided by the entity. For example, Sunway Berhad segments such as property development, construction, and trading represent different business activity. This snippet show business segment reporting in accordance with MFRS 8, where segments are identified based on the internal management report.
As you can see from
this snippet, the construction segment records the highest revenue of 1,238,082 ringgit compared to other segments. This indicates that the construction segment is the main contributor to Sunway Berhad's overall performance. While this snippet shows the geographical segment reporting where the company's performance is present based on different locations. As you can see, Malaysia contributes the highest revenue of 2,255,512 ringgit, while other countries such as Singapore, China, and United Kingdom contribute a smaller portion. That indicate that the Sunway is highly dependent on the Malaysian market for its revenue.
The key benefit of segmental reporting for a financial position is to enhance the performance evaluation. Segmental reporting allows users to determine the financial performance in more detail instead of relying only a total company result. As we can see in this table, it shows that a segmental reporting of a Sunway Berhad for financial year ended 31 December 2025. The company divides its performance into several segments such as property development, property investment, construction, healthcare, trading and manufacturing, quarry, and also an investment holding. In this table, it shows that the company construction segment recorded the highest total revenue of approximately 8.808 billion ringgit and the highest profit before tax is 533 million ringgit. This shows that the construction is the main contributor for Sunway Berhad company. It shows that a strong demand for construction project. While the other profit before tax for other segment is not the higher as the construction cost, but it still provide the revenue for Sunway Berhad. In conclusion, segmental information helps user identify the best performing segment, such as the constructions being the main profit driver of a Sunway Berhad company.
Secondly, segmental reporting helps users make better prediction of future cash flows. Based on Sunway Berhad's segmental report, the company provides detailed information on revenue and profit by both business segments and geographical areas. For example, we can see that Malaysia contributes the largest portion of revenue, while some countries like Australia and the UK show lower or even negative performance. This information allows financial statements users to identify which segments and regions are generating stable income and which are underperforming. As a result, users such as investors and creditors can make more accurate forecasts about the company's future cash flows and overall financial prospects. Therefore, segmental reporting improves the quality of decision-making by providing insights into future performance.